Imagine a failing textile mill in the late 19th century, a far cry from the titan of industry it would become. This is where the extraordinary journey of Berkshire Hathaway truly began. Our story starts not with Warren Buffett, but with the Berkshire Cotton Manufacturing Company, founded in 1839 in Massachusetts. For decades, it churned out cotton fabric, a cornerstone of American industry. But by the mid-20th century, the textile business was in steep decline. Enter Warren Buffett in 1955. Young Buffett, fresh out of business school and already a shrewd investor, saw an opportunity not in the textiles themselves, but in the company's undervalued assets, and its name he began acquiring shares of Berkshire Hathaway. Buffett's approach was unconventional. Instead of trying to revive the failing textile operations, he began to use the cash flow generated by Berkshire's remaining profitable mills, and later, the company's assets, to invest in other businesses. This marked the true genesis of Berkshire Hathaway as an investment conglomerate. Buffett strategically acquired stakes in undervalued companies with strong fundamentals and enduring competitive advantages, slowly transforming Berkshire from a reluctant textile owner into a powerhouse investor. Through a series of astute acquisitions and brilliant capital allocation, Buffett steadily built Berkshire Hathaway into the diversified behemoth we know today. A testament to patience, vision, and a deep understanding of value. A circumflex euros, all evolving from a struggling mill's ashes.